Welcome to another episode of the Bitcoin Brief with your host, Tone Vays. And we got a really special show for you tonight. That's why I am still on the big screen, because we're keeping it a little bit of a surprise, because we are finally have a bigger crew back together. We have 4 people on this show. Let's welcome back Giacomo Zucco. Hey guys.
Hi everybody.
Giacomo, where are you coming from?
I'm from Milan, and this is why for the first time in many years you will actually hear a good audio quality, because I'm using Mir setup. So
wow, I know, guys, please have a little thumbs up in the chat. Let's do a like, subscribe for Giacomo using an actual microphone.
We got some feedback about that. I remember
right.
some comments.
That was made, last decade. All right, guys, we got Bitcoin Mechanic coming to us from Mexico, and of course, Jason, our resident Texan. How are you guys this morning?
Well, it is morning, but you told everybody good evening or this evening and all that stuff. You're very Eurocentric right now.
It's already getting a little late for Giacomo and I in Europe.
Yeah, dude, it's hard getting up this early, man. What the? Yeah.
Are you on Mountain Time? Is Texas Mountain Time or Central?
Central. Yeah.
Right.
But it's still early. I'm usually like working out and stuff, like waking myself up instead of having to do this.
Quick trivia question, because almost 98% of America will get it wrong, maybe 99.9. I went to Florida State University, which is on the panhandle of Florida. But if you go a little bit west, in Florida, it is on the same time zone as the entire state of Texas. So the west side of Florida is on the same time zone as the entire state of Texas, as crazy as that sounds. All right, guys, let's jump onto the show. I know Giacomo is a little limited on time, and and I know you guys are very, very busy. We got 6 topics today. We're going to try and get the show moving. Not going to spend too much time on the first one because it's just evil, and we can just stop there. Chainalysis is showing you all of the additional ways they are making money spying on your Bitcoin transactions. So you have to be absolutely careful, even Googling your transactions and your public keys, because it looks like they are just capturing your Google searches inside one of their block explorers, and then sharing that info with the authorities. They're also claiming they can de-anonymize a lot of Monero transactions. We did a whole episode about Monero with Mechanic, that it's really not the most optimal cryptocurrency to use. You still want to stick to Bitcoin. You want to use Bitcoin's privacy features. You want to start to understand Liquid and the privacy that Liquid brings, amongst other things. And generally, you want to be careful with public block explorers. What is a public block explorer? I should probably, go to blockchain.info, which I would never use because I don't trust them as a company. Another option, of course, is Blockstream and their block explorer, which I would trust a little bit more. But anyway, I'm gonna stop rambling. You know what, Giacomo, you haven't been on a show in a while. Let's have you go first.
So you already said the most important thing about this leak, which is don't use a block explorer especially if your transaction is privacy sensitive. Don't even use Blockstream.info. I mean, Blockstream released an open source version of the block explorers. You should run your node, and you should use your node, maybe with the Explorer by Blockstream, in order to check stuff. If you really have to check on another person's computer your sensitive transaction, maybe use Tor and a VPN. Blockstream.info is also accessible via Tor by hidden service, so that's better. Of course, if you don't do that, you have to expect that, not in the Blockstream case, I hope, but in other cases like this Wallet Explorer stuff that was just leaked, there will be some kind of Chainalysis agency to check that. Also, about this leak, one very interesting thing is that the leak is in Italian. I don't understand why. Most people asked me 2 days ago and yesterday why the slides from Chainalysis that leaked are in Italian. First of all, we don't know if these documents are fake or true. We have no way to check directly. I suspect they are true because nobody will even think about forging something in Italian for no reason. I'm not aware of Chainalysis having any headquarters or branch in Italy, but maybe if they are trying to sell services to Italian police or Italian government or something, maybe they will try to localize the slides. Also, we know that in Italy there is the neutrino faults acquired by Coinbase. So I don't know, but it's very strange that they are in Italian. And one other thing which is very strange is that there is a claim that even if the slides are true, we don't know if these claims are true or not, literally, because it's a promotional slide. In any case, it's like a pitch, it's like advertising material. But they claim they managed to recollect 60% of the transactions in Wasabi. So people putting money in Wasabi, mixing, taking money out of Wasabi, they were able to reconnect 60%. This is a very bold claim, not impossible, of course, and mostly it will not say much about the reliability of the CoinJoin service itself. It will mostly say something about what users do before and after, because if you let's consider that you take money out of an exchange, you put it in Wasabi, you mix, and then you take all your TXOs, mixed TXOs, and you send them to your hardware wallet accessed from I don't know, a Ledger Live with your IP in ClearNet. So of course you will de-anonymize yourself completely. What is very interesting though is that they compare Wasabi. They don't even mention Join Market and Samurai. They compare Wasabi with the use of the shitcoin Monero that me and Mechanic, we discussed that a little bit with all the problems and shortcomings, and they managed to link 65% of the Monero transactions. So far in their own claims, they are having better luck with relinking people passing through Monero than relinking people passing through Wasabi, although 60% is already very, very much. So all the people storming any CoinJoin conversation, trolling, just saying use Monero instead. I mean, if these leaks are to be believed, Monero is faring worse than Wasabi, which is itself faring worse than what Wasabi would fare if you use that correctly without relinking everything when you finish using it.
All right, thanks for all that, Giacomo. I'm going to transition over. Well, I'm going to do a little shout out to Wasabi, as Adam Fiskor is very likely to join us in Dubai for understanding Bitcoin, do a new demo, and show us the new features of the Wasabi wallet. And I want to transition to Mechanic next on his thoughts on this, because the first thing Giacomo said was you should always search your transactions inside your own node. And Bitcoin Mechanic is a new member of the Start9 team, which makes the embassy, which makes it a lot easier for you to run your personal node and your personal server for lots of other stuff. And if you are interested in the Start9 product, which is awesome, go ahead and go to tonevays.com affiliate page for the link. All right, Mechanic, all you, man.
Yeah, well, when it comes to privacy, it should. I'm hoping people aren't making that mistake. But yeah, if you're doing a private transaction and you involve a third party in finding out anything about what's going on with the address, the relevant address, you're going to have a bad time. I'd even go so far as to say something else that's loosely related is a lot of people are still using big data for their email, right? And most exchanges, when you do a withdrawal, sure, I mean, the exchange knows the details anyway, but if you have a Gmail account and you do a withdrawal to a Bitcoin address, usually, I'm pretty sure most exchanges will just email you saying, hi, we've done your withdrawal to this address at this time, to this, here's your full name and everything. And, you know, stop making it easy for them. Like, it's maybe understandable that people would stick their addresses inside public blockchain explorers because they haven't got a node set up and all that, or they don't know how to query it. But, you know, just having a Gmail account and having all of your Bitcoin withdrawals from your KYC exchange sent directly to it companies like Chainalysis are probably like, God, they're making us redundant because they're just making it so easy for law enforcement to know everything about people's Bitcoin history.
All right, Jimmy, your views on this, and maybe throw in some good practices for people watching.
Yeah, so I mean, I think we all suspected that Chainalysis was getting data from other places. I don't know if this confirms it or not, but they're probably doing stuff like this, right? Trying to get data. They're probably running a bunch of nodes, trying to figure out where things are originating. This is why, you know, we wanted to try stuff like Dandelion, though that has some technical problems, like with respect to you know, how Bitcoin works and stuff like that. But Monero doesn't have enough of an anonymity set, and you know that's clear in this report. And I believe this is one of the few Monero block explorers or whatever. Try running a Monero node, guys. See how easy that is. Not easy, and the blocks are enormous because, of course, like the complete privacy with the proofs that they have, which are many thousands of bytes, not really easy to do. And there's a reason why, you know, Bitcoin does what it does, and you'll learn very quickly if you try to run your own Monero node and you know, run a block explorer on Monero on your own node and query your own stuff. Like it's not going to be easy, and it's actually going to be quite difficult. There's a reason why they're able to get all of this data. The other thing to note is, you know, probably the best practice for this sort of stuff is to not give them the data. And a large part of doing that is using something like Lightning. If you're paying people through Lightning, it's going to be fairly difficult unless you set up like a direct channel with your counterparty, you know, right beforehand. Like for a lot of these companies to be able to get the right data to be able to figure out that you did that transaction, Lightning is actually significantly more private because of the many nodes that exist. The anonymity set essentially becomes the nodes that are connected to you in one shape or another. So I would say using Lightning is going to be much better going forward, and that will get you a lot more privacy without too much trouble. And there are lots of good Lightning wallets already. So yeah, I would encourage that. Though, like if you're like centrally connected, you know, it's not going to get you quite as
and
much
Liquid as well, guys. Check out my interview with Adam Back where we discussed the privacy features of Liquid. So keep that in mind as well. All right. Oh,
beautiful picture. I hadn't seen this one with Adam as Doc Brown.
Yeah, I just noticed this. Does someone have a good answer as to why CoinDesk is in beta?
Nope.
No idea.
No idea.
Excellent. Hey, Jimmy.
Oh, it might be. Oh, you know what? That looks like a new website design. That might be why.
Oh, yeah.
Yeah.
Yeah. By the way, I actually hate the new website design, but it doesn't matter. My opinions don't really matter. Hey, Jimmy, I'm gonna love for you to kick this one off. So there was an interview with Gary Gensler. Nothing new here. Gary Gensler has come to the position that this YouTube channel has taken since we ever heard about Ethereum, all the way back in 2015, that it is an unlicensed, unregistered security, along with most others. In this interview, he clearly stated that most of, if not almost all of these cryptocurrencies are in violation of security laws. Some are in violation of commodity laws, and some are in violation of both. I know, Jimmy, you do not like regulation. You do not like the SEC or the CFTC. But I'm sure your biggest complaint of Gary Gensler was his criticism of private money and how private money doesn't last very long. I'm sure you've heard this 30-minute interview. It was actually, I mean, I didn't really learn anything new, but you know, give us a little rundown.
Yeah, so Gary Gensler is the SEC chair, and that is a very powerful position. The thing to know about him is that he did he was at MIT for a while, and that organization, of course, has the Digital Currency Initiative and so on. So I think he actually studied this in depth, and all of his statements so far that I've read from him indicate that he actually understands what's going on. Bitcoin is actually decentralized. He sees everything else as the centralized thing. And he seems to be making a power play in Washington to basically, claim the authority to, regulate all of these things, especially versus the CFTC. So he, all of these interviews, he wants to basically be the government guy that's shaking down all these altcoins for money, whether through fines or taxes or something else. That seems to be it. Now, I have no love for government authorities like shaking down people for money, right? Like this is like not very different than the mafia, like shaking you down for money. But they're shaking down some people that have been claiming that they're decentralized and are not vulnerable to such shakedowns. So it's kind of good to see, or it does sort of like give me some Schadenfreude to see that like the words of all these altcoiners are coming back to bite them. But we'll see. That said, like there's a lot of powerful forces in Washington, and there will be a lot of lobbying, a lot of money thrown at various senators and congressmen, and maybe even like presidential candidates and things like that to basically get a carve out for their altcoin or something to that effect. But yeah, I mean, this this is what we've been warning about for a long time. Like if you're centralized, then they can regulate you, they can tax you, they can maybe even completely destroy you. So yeah, that was the main point for me.
And real quick, did you hear his views on private money?
I didn't see that part.
Okay, yeah, it was towards the end. It was towards the end. It's all right. Don't worry about it. Giacomo, I know you and I have debated the SEC, and you hate them with a passion. So take 45 seconds, do a little rant for us.
Yeah, I mean, I understand Jimmy's mixed feelings. I have mixed feelings too. For me, the situation is like this. We are in a school, there are school bullies, aggressing people. And now you have a friend who will just put on this Harry Potter invisibility cape, which doesn't work. And you tell them it doesn't work. You have to do something serious to protect yourself. You cannot go around just using bullshit. And they mock you because their invisibility cloak works very fine. And then the bully arrives and they will just beat them down. And so you feel like on one side, the bully is the bad guy, and these idiots using Harry Potter invisibility cloaks are the victim here. So I'm all in favor of the victims and not of the aggressors, which are the SEC. But there is a reason we told you that you should use reasonable defenses, not just pseudo magic stuff. And this is the same for shitcoins, centralized shitcoins. You were thinking that just claiming you are decentralized will protect you from the law. This will not work. There's a reason why Bitcoin uses real decentralization and pseudonymity of the creator and of the users. There is a reason for that. We tried to tell you, I'm not happy if something bad happens to idiots, but I also feel vindicated a little bit. So I understand the mixed feelings here. If I have to choose, if I really have to choose, gun to my head, between the aggressor and the stupid victim, I still prefer the stupid victim. So I prefer shitcoiners over the SEC.
Yeah, and
right,
I think
go for
it. Yeah, I think when it comes down to it, there's just so many misunderstandings that it exposes as well. Like not specifically recently, but whenever there's talk of regulators coming after crypto, they always try to pull this, oh, you shouldn't laugh at us Bitcoiners because they're going to come for you next. And my response is always, but we're designed for that. In fact, we actually benefit when they come after us. We're not like you. We are not the same. So I'm just left thinking, You know that stupid Simpsons meme where it's like a bunch of guys on a boat watching two monkeys fight, and like they label the two monkeys. One's the SEC, one's the, in this case, the whole crypto industry. Which Brian Armstrong, by the way, shout out to us for goading Brian Armstrong into finally acknowledging El Salvador adopting Bitcoin and using the word Bitcoin. So that's quite impressive. He's still yet to ever mention the word lightning, which is crazy. But anyway, his whole meltdown about the SEC coming after crypto, you know, it's irrelevant. Crypto is irrelevant to Bitcoin. I really like Ghoster Svetsky's take on it, actually, where he talks about crypto being for the masses and Bitcoin being for the remnant.
Yeah, was that his like 50? Was that his 57 tweet
thread? Twitter thread, yeah.
Yeah, no, yeah. I was gonna reply to that. I'm like, dude, I'm not reading 57 messages of 250 characters. But
it was really good.
Anyway.
That's also a natural selection. People reading all the tweets are the remnant. You, Tone, are part of the masses right
Giacomo,
now.
you haven't done one of those in a while. You used to do really good long Twitter threads, but you have a baby now.
Yeah, I should. You're right.
Yeah.
Okay.
It's great when you have a baby.
Hey guys, back to screen share because we're gonna keep the show moving along. This is gonna be very quick. We're gonna stick with regulation for 200. You know, now that the big banks like JP Morgan and Deutsche Bank are getting on the Bitcoin train, they're going to be helping Bitcoin fight some of this regulation. So I'm not going to dive into the article, but just keep in mind, these institutions getting into Bitcoin is not necessarily a bad thing. It's a double-edged sword. On the one hand, they will now, you know, centralize storage for a lot of individuals that will not take, you know, self-custody of it. But on the other hand, they don't want big regulation either, and they do have lobbying power to help that happen. Though then again, they could also shoot for huge regulation because they know they can't compete. So another double-edged sword there. And Janet Yellen and the Treasury Department is going after some exchange I've never heard of, Suex, supposedly for, Jesus Christ, how is this woman still like living? It's like scary. It's like episode of The Walking Dead. I've never heard of this exchange, but supposedly this exchange helped launder a bunch of Bitcoin that was coming from ransomware. I am, of course, not surprised. There will always be an exchange doing that, but I doubt the SEC has any jurisdiction over this because I'm pretty sure that is not an American exchange. Anyway, general quick thoughts. We got to move on to better topics. Lex, let's start with you on this one.
Yeah, I don't have a massive amount to say on it. I mean, it just reeks of shakedowns again, like Giacomo was saying, you know.
I think that was Jimmy.
Yeah, sorry. Yeah, good point. It just seems like, when HSBC launder drug cartel money, right? Everything's fine because there's a whole established mechanism for how governments get some kickback from doing that, which is why it never ever stops. But crypto is just them saying, whoa, you're accepting a bunch of scammy money like that might be from drug deals and stuff like that. Where's our cut? You forgot to deal with that part first. So it just feels like that needs to all get established and figured out. And
speaking of HSBC, they're in a little bit of trouble based on how much holding of Evergrande they're holding. We can move on to the next one unless you guys really care to say something about Janet Yellen or JP Morgan, which I doubt. So I have not had the time to dig into what the hell is going on over there in China. We don't have much transparency on China. People are apparently freaking out because they got like mortgages through Evergrande, which I'm not sure about, how they're going to exactly lose their houses. The crazy thing is the global companies that are invested in this company that owes billions upon billions of dollars, and HSBC and Royal Bank of Canada, but Canada will just print more money. That's irrelevant. They're turning into a socialist republic anyway. But BlackRock taking a little bit of a hit here. I took a look at BlackRock stock, and they still seem to be doing okay. So like I said initially, I don't understand what all the hype about Evergrande is. I don't see how it's a big deal if the third biggest holder of your debt is BlackRock, and BlackRock stock was barely affected by this. There's an expectation that the government's going to print money and bail it out. And I don't think this has that much of an effect on Bitcoin. And here's the article on it. I mean, I don't know. Am I crazy for not thinking this is a big deal? What am I missing? Has anyone keeping up with this news? Jimmy?
Yeah, I think. Sorry. Yeah, go for it, Jimmy.
Yeah, I mean, I've been keeping up with it, and I have a podcast that I recorded with Preston Pish on it on my podcast, and you can go listen to. But basically, this is a big deal because they're in just so much debt. It's $300 billion, right? Lehman was maybe 400 billion or something like that. But what's worse is that this has been like just incredible malinvestment for a very long period of time. Chinese people like to save in real estate. Something like 70% of household wealth is stored in real estate in one shape or another. For a while now, they have sold, more people have bought second homes than first homes, and third homes are close to the number of people buying third homes is close to the number of people buying first homes. So it's an insane sort of like weird thing because a lot of these apartments are sitting empty. Something like 30 million units in China
Jimmy, I just watched a video of China demolishing like 30 high-rise buildings because they were vacant from the beginning. I mean, it's insane.
Well, yeah. I mean, and there are lots of developers that will start a building and not have money to finish. So, I mean, this is all wasted effort. But 30 million units sit empty right now. This was, like a few years ago, we had all these like stories about these ghost cities and so on. We were wondering who the hell is buying them. Well, it was people that were buying them to invest because Chinese people definitely like real estate, and that's what they trust to store value over the long term. So Evergrande was one of the pieces, and they went out and built as much as they could. The problem is the Chinese government about a year ago started like cracking down on it. I think President Xi Jinping, like he started saying stuff like, houses are to live in, they're not for investment or whatever. They had this common prosperity doctrine and so on. So they changed the rules around a little bit, and this started to get Evergrande in trouble. And they have $300 billion in debt, a lot of foreign investors, a lot of buildings that they're in the middle of building that they couldn't necessarily finish, or they aren't going to be able to finish. They're not paying their suppliers. They're not paying their, the debt off. A lot of the coupons on their bonds and so on are not getting paid off. So, like this, and they're the largest, but there's two other real estate developer companies that have something like 90% of all real estate development in China that are probably also doing similar things, and they'll probably be in similar trouble. So you got an entire country full of, like malinvested capital, buildings that are sitting empty that no one's living in, that and their population isn't growing that fast, by the way. I put out a tweet yesterday showing that it's right now, from 2020 to 2021, their population grew by like 0.37% or something like that. So in about like 7 to 10 years, they're probably going to have negative population growth. So there's no way all of these all of this real estate that's been developed is actually going to get filled up. I mean, it's going to be like somebody's second, third, fourth, fifth home or something to that effect. So what you're getting is a lot of malinvestment that's kind of coming home to roost. And China needs to take care of this because it's $300 billion and it will completely destroy a lot of people's savings. There's a lot of people in China that bought real estate through Evergrande, and they took the money up front, but of course prices have gone through the roof, especially in a lot of the raw materials and stuff. So they've been screwed every which way. And And it looks like what's going to happen is that the company is going to be nationalized, and they're going to try to selectively, make whole like the people that actually invested, but sort of cut all the executives and the actual company loose. But I mean, good luck with that. Any government nationalizing a company like that, there hasn't been a very good track record. Usually they're run even worse than they were before. But yeah, this has some serious reason for contagion. If China goes into a downward spiral, then we have some contagion that'll come over to the rest of the world, because they produce pretty much like all sorts of goods for the rest of the world.
So real quick before I go over to Lex, to what you just said. So two things that, again, maybe I'm the complete idiot here. So one of them is, if I took out a loan and bought this house, and then the loaning agent goes bankrupt, why does that even affect me, right? Like, my original mortgage was with Countrywide, and then Countrywide went bust, and Bank of America ended up taking over, right? Like it's really, I mean, I have the asset, I'm living in the asset. So I just have to pay that loan to someone else. Second, I'm totally impervious to $300 billion. I just don't see $300 billion as a lot of money anymore, considering the United States printed what, 9 trillion last year? What the hell did they print last year?
No. Right? It was about 4 trillion, 4 to 5 trillion.
Fine.
So,
I'm sorry, 300 billion is like no longer a big number to me. I mean,
so that's probably just
in about 3 years, MicroStrategy is going to have more than $300 billion on their balance sheet. Like,
right. Tone, you have to understand, this is the tip of the iceberg, right? 300 billion is just the starter stakes. That's the liabilities that this one company has. You have 2 other companies, and who knows what else is going on in China, right? Like, 300 billion is based on their numbers. You have no idea like how much worse it actually is after you like look through their books and audit it and so on. So those are just like table stakes. We have no idea how big this thing gets, because it's all leverage on leverage and so on. Also, to your other point about like, if you're living in the asset, yeah, fine. If you're already living in the asset and you have a mortgage, that's fine. But you have to understand, this is a real estate developer. Most of their properties are not finished. So a lot of these people prepaid for a lot of these buildings that are not finished. And there's not even that much of a prospect that, like, if they go bankrupt, it's probably going to just sort of sit there. And it's going to be a complete loss for them. You're not going to, and these are, again, second, third, fourth, fifth, sixth homes.
Right.
These are not.
Right, exactly. It's your second, third home. So if you decided to take the risk and bought into a second home that never got finished, that's the risk that you take to buy it cheaper in pre-construction. That risk should be baked.
Yeah, I mean, I agree with you, but there are going to be a lot of people upset that they lost like, $400,000 or however much they put into this real estate, and like that's their life savings. This is Jimmy, like, wouldn't you be upset if you lost your life savings?
Real quick, yeah, I would be, of course. But what does this do for Bitcoin? Just real quick.
Well, so I think we see possibly, well, it depends on what the CCP does. If they do sort of take over, print money to make all the bondholders and like real estate investors whole, then I think we see a lot of credit expansion, especially from China, and that in turn means that everybody else probably expands their credit as well, in which case you're going to see even more money printing, probably like, means that Bitcoin does well. If they decide, on the other hand, to let this unwind a little bit, then you get a credit crunch. And this is one way in which I can think of, in which, that starts affecting other places. Chinese real estate investors have been, investing all over the world, right? Like, that they buy up lots of property in Vancouver, Toronto, LA, New York. London, like just everywhere around the world, there are Chinese real estate investors that have completely brought up the markets by buying a lot of these properties. Well, in a credit crunch, they're going to need liquidity, and those properties currently are fairly liquid. So what happens if they sell those things on the market? Well, then that's going to bring sort of like a credit crunch in the to all these other countries as well. So you get some level of contagion just as a matter of course, because we're all connected essentially by this banking system and the money that we're all using. And if we do have a credit crunch, I think some of the money comes out of U.S. And some of the money comes out of Bitcoin, and you see a dip for a little bit. Just like we saw like last March when there was a credit crunch for a brief period before the Fed started spinning up its money printing machine. But yeah, I mean, this is why like a lot of people suspect that there's not going to be a credit crunch, because the consequences like all over the world are so dire. But I mean, it really depends again on what the CCP does and what they decide is the right course of action.
Right. Lex, you've been patiently waiting because I know you wanted to say something about this up front. Go for it.
No, Jimmy covered everything. But I will say there's the news itself, and then there's how we react to it. And I'm sort of I have some PTSD now about overreacting to contagious things coming out of China, whether it's medical or whether it's financial. I do think that I mean, it could be not that big of a deal as you're saying, but the world just decides to go full retard about the whole thing, and it causes a massive collapse anyway. And those economic triggers like that are usually like some like World War I style triggers where one tiny thing happens and then everything collapses. So, I mean, if anything, I'd encourage people to be like, don't worry about it. But, I think Jimmy actually has a lot more of a deep understanding on it. So listen to Jimmy, guys, not me, when it comes to this.
Giacomo, you have anything to add?
I think you guys covered all the aspects, but basically I would just like to connect with the fact that, I mean, so Jimmy and Lex are right. This thing is not that big in itself, but could be a small trigger to something bigger like Lehman Brothers was. But then, as you said, Lehman Brothers was something that happened in a world where just printing trillions of dollars to fix something was something that was possible but contentious. There was some discussion about the TARP, about the debt ceiling, about the first quantitative easing, the second. Now, after COVID and coronazism, the discussion is not anymore. There is not contentious anymore to just print trillions of dollars to solve anything. So I don't think that the possible scenario could be something like Lehman style, where we have some kind of chain reaction of bankruptcy. I wish it was that way, because that would be healthy, actually. When you have a chain reaction of bankruptcies following unsustainable exposure, that's healthy. That's the way you recover. That's like withdrawal crisis after a drug. In this case, I don't think you will have that. I think you will actually have a printing reaction that will eventually turn into a monetary crisis, which is good for Bitcoin.
Well, so I'm not so sure it's that obvious that the CCP will just print their way out of it, because they've been actually fairly conservative on a money printing basis. And you can kind of see it in their in like the M2 statistics and things like that. Everybody else has been very aggressive. They've been probably the least aggressive out of the major central banks around the world. So, they're a wild card because they are authoritarian. They don't necessarily have to suffer all the consequences of contraction. They're not like, you're not suddenly going to elect somebody else because they caused their economy to correct for 4 years and get rid of all the malinvestment. They're thinking long term. They might actually ride this out, in which case they might force everybody else to sort of have to go through the same level of correction. I don't know.
Right.
So the Chinese Communist Party may be more Austrian than the American, American government.
That's what I was going to say. Like Canada might have to print to bail out Royal Bank of Canada, or they'll just allow Royal Bank of Canada to bail in from the Canadian citizens, because clearly they just don't care about the socialism happening in their country. Lex, good job getting out. And I hope you don't have any money in the Royal Bank of Canada, because if China doesn't bail out Evergrande, the Royal Bank of Canada might just use the people's savings in that bank to bail themselves out.
Yeah,
Lex, they're not going to do that. They're just going to print more money.
But anyway, Lex, if you have money in the Royal Bank of Canada instead of staking sats, you deserve your loss.
Yeah, I'd agree. I do keep a small float in fiat because I have a mortgage to service, but it's as small as possible for obvious reasons. And I think it's right though. I think what you're saying to me, they did a $18 billion bailout so far. Right, which is a bailout.
Well, and that was just the foreign creditors to make sure that it doesn't spread outside of China. But I don't think that's enough.
I think like when it comes down to these things, like China, it tends to not do the things that the rest of the world does. It tends to actually be a bit cleverer. So I mean, or a bit more conservative, and like you say, even more Austrian. So it's certainly more capitalist than a lot of countries, which is ironic given that they're the Communist Chinese Party. So I wouldn't be surprised if they do something that maybe affects the rest of the world negatively, but actually is a smart move for them on an actual longer term basis than we'd maybe expect.
All right, guys, we need to move on to talk about Bitcoin. Real quick, looks like Bitcoin.org was hacked yesterday, and for a short amount of time, someone put up a QR code with one of those, give us money, and then we will give you more money later on. I know so many people that got caught on this. I got another message today that a fake tone Vays scammed her for a few $1,000s, and then she told, anyway, it's
but Tone, I found out yesterday my mother-in-law has been talking to a fake Tone Vays, and she came back and was like, yeah, he's so friendly, talk to him all the time. I was like, what? I went on the account. I was like, dude, this is a fake account. Like,
oh no, guys, please, like there are fake Tone Vases make so much more money than actual Tone Vays. It is absolutely incredible. So it looks like Bitcoin.org is back. People are like, how can this happen? And the thing is, you got to realize a lot of these kinds of things, just like with SIM swaps, they're internal hacks. I mean, this is someone with actual like root access to that domain. Like they are more internal. This could have happened potentially through an ISP. I don't know how that kind of security works, but a lot of this stuff is, I know SIM swapping is internal by employees. So some of this stuff is just employee access to it. I don't know if you guys want to comment on this, Jimmy. I don't know. You and Giacomo talk better than I do.
Well, I mean, we've always been kind of like, where I've been suspicious that Cobra is like multiple people, because like he has like a multiple personality disorder and says one thing at one time and then another thing at another time. I suspect that it's probably a group of people, Cobra Bitcoin, and one of those people got compromised in some way. And, the Cobra obviously controls this domain. So that's what I suspect happened. That it is multiple people, and they're like, I really don't like this sort of thing is happening. It's a valuable domain, obviously, like Bitcoin.com, which Roger Ver controls. But here's the thing, like, you can find information on your own. Bitcoin does require you to think for yourself instead of blindly following one place or another. So I would encourage you to do that, though that's not a message that a lot of people are going to want to hear. But yeah, think for yourself.
Yeah, I'm happy about it. I mean, Bitcoin.org is an obvious central point of failure, just like Bitcoin.com. The sooner these things become laughably, obviously scams, the better.
Yeah, I also agree. This is good for Bitcoin.
Yeah, I'm
This
going
is
to be on
good
the
for
other
Bitcoin.
side of that one, Giacomo. What do you think about mechanics comments? I'm not a big fan of that kind of. It's kind of like what Stacy Herbert said. I don't really want my uh, kids, or she doesn't have kids, but I don't really want my nieces and nephews drinking and driving to learn the consequences of drinking and driving, right? So
Sure, but I agree. But in this case, we are really, I mean, a kid can learn from you that drinking and driving is bad, but people in general cannot really learn not to trust central point of failures without some kind of pain. I think it's just unrealistic to imagine that just through the means of divulgation and education, we will prevent people from being scammed by central point of failures. So I think that single persons, maybe you can really save your friend, your relative from being scammed by the fake Bitcoin.org or the fake Tom Vays profile, but you cannot rely on that to save everybody. Everybody will just be saved when suffering will teach a lesson the hard way, unfortunately. So in this case, Bitcoin works because there are no central point of failure. Bitcoin.com was one, very trivial to exploit, so Roger Ver exploited it. Then Bitcoin.org was another one. It was already exploited, as Jimmy said, because even if the website itself was never used to push malicious stuff, the same Twitter account that was managing these with one of its several personalities was pushing shitcoins and contentious forks. So it was already in a way compromised. And eventually you will have something similar with the GitHub repository as well. I mean, someday we will not be able to rely on GitHub repository for core, and we will have to actually make some effort to understand which new core release is legit or not. And that's eventually inevitable and not even that tragic with the ossification of the protocol. Eventually it will be too complex to fake and too complex to take over. It already is, but these are all central point of failures that they are fine for the short term, but they are a problem for the long term. So we have to keep moving this will be a dynamic equilibrium in which people will learn not to trust Bitcoin.org, and then there will be BitcoinCore.org, and then it will not be trustable anymore because that will be captured as well, and then people will just trust a new stuff, and we will keep running because that's the only way to remain anti-fragile.
Yeah, to bolster my point, I'd say the reason that not your keys, not your coins is as powerful and as widespread and as accepted as it is, and is part of like one of the Bitcoin 10 commandments, if you will, is because of Mt. Gox. I don't if Mt. Gox hadn't happened and a few other smaller examples of such a thing, I think people would be more lackadaisical in their attitude when it comes to self-custody.
all right, let's move on. We got just two more headlines to cover. One of them is a good story where a Dutch football club called PSV is now hodling a bunch of Bitcoin from a sponsor. Now, I actually have not heard of the company that sent them the Bitcoin. What was the name of it again? Can't find it now. But yeah, what was the company? Announced partnership, Bitcoin exchange.
Anycoin Direct.
Anycoin Direct. I have never heard of them, so maybe you guys have, and you can give us a little bit of an insight. And they took the sponsorship. They took the Bitcoin. They're holding on to the Bitcoin. They continue to pay them in Bitcoin and give it some time. And this could be the wealthiest football club in Europe if they hold on to that Bitcoin long enough. And then they'll be able to afford some amazing players. And this is likely to create additional competition within European football of hodling Bitcoin. So this is, of course, amazing news. Giacomo, you are our European citizen. So let's have you go for this one.
Even if I'm the less sporty one, I guess. But this is okay. This is just. I think that this cycle, even if we have some kind of front runner like El Salvador that are already entering the next cycle. I think that will be mostly nation states and central banks and huge national banks buying Bitcoin as the correlated assets. Now we have the cycle of mostly private companies. We started with, of course, CryptoSquare and MicroStrategy that were like the MicroStrategy was the El Salvador of listed companies. In a way, it was the icebreaker, the one starting the trend. And then everybody can just make a very simple consideration. Is it rational or not to diversify in Bitcoin? And the answer is just look at the correlation. You have a low correlation. And if you have low correlation, basically you have a de-risking. You can lower the risk on your portfolio, not just because Bitcoin goes up. That's actually what it does in the long term. But even when it goes down, with good approximation, it doesn't go down the same as the stock market or bonds or normal commodities or tech equities or stuff like that. So it's a correlated, so you can lower the risk of your portfolio. So if you are a reasonable asset manager, you start consider Bitcoin inside your portfolio. It's really just rational, even if it doesn't go up immediately. So I think this will become more. I remember that Rodolfo was keeping is keeping an updated website of all the companies keeping Bitcoin in the treasury. And the beginning was like, okay, 3, 4, 5, okay, now it's probably not really up to date anymore by definition, because it's probably impossible to know how many football clubs and companies and small companies will be using Bitcoin in their treasury all the time. Of course, this kind of use, I think this is not necessary here to stay in all scenarios, because in a very adversarial scenarios in which government enter what Eric Voskuil calls the black market phase, where governments actively try to ban Bitcoin, personal individual use will keep going, because my key is my Bitcoin, my node, I don't care. But company official use will be, of course, ruled illegal in some countries. So we may have actually some kind of stop to this trend. But as long as most jurisdiction will consider Bitcoin legal to store in a company, that will just happen for a very long time.
This is that list, by the way, that Giacomo was talking about. It is buybitcoinworldwide.com/treasuries. Rodolfo is maintaining this list, but it's probably not to date, because Rodolfo loves starting all of these little projects on a whim and then realizing how much effort and time they take to maintain. Lex, you want to add anything here?
No.
Well, I'll add something. So I actually know this club, PSV Eindhoven, and I followed them for a few years because the South Korean player by the name of Park Ji-sung was on that team for a while. The thing about this club is that they're actually really good. They've won a lot of titles in the Netherlands, and I think one year I still remember they went to the quarterfinals of the Champions League when Park Ji-sung was there and stuff. And they've had a lot of really good players come through their system. So Ronaldo, Romario, Van Nistelrooy, Arjen Robben, and many others that have come through this club. So they tend to be on the forefront of things like this, where they'll innovate and try different things, and they'll do that. So I think it's it makes sense that they would be the first or one of the first clubs in Europe to do something like this. Once we get like the major clubs in European football starting to take this to hold Bitcoin, that will be really interesting. If you see like a Chelsea or a Man City or Real Madrid or someone like that, or maybe some of those Italian clubs like Juventus or something start taking Bitcoin and putting it on their balance sheet to afford like higher quality players and so on. I think that will be really interesting, instead of like PSG getting everybody because they're like a glamour club in Paris and stuff.
All right, we got one more story, but someone just commented about the anti-Bitcoin protests going on in El Salvador. I don't have a big comment on that. Think about it, guys. You know what? Let's do that first. Like, I'm not sure who's funding that. I don't know why people would protest it so much. I mean, yeah, they made Bitcoin legal tender, and they're somewhat forcing people to accept Bitcoin. So instead of, going back to your business and learning about Bitcoin and figuring out how to accept Bitcoin, because it is definitely towards your financial benefit, you're going to go out and you're going to protest it. It kind of seems a little bit silly. And I mean, I'm not going to go into the conspiracy theory land, but someone is financing that operation. I'm just not going to go down the rabbit hole as to who. Any quick thoughts, guys?
It's definitely overblown.
I agree with. Yeah, it is overblown, but even when you look at the amount of people, I also think, I'm not usually a conspiracy theorist. I think that spontaneous incentives to do something stupid are usually more important than conspiracies. But in this case, it's really strange. I mean, if you really read the law, it's not even that much forcing, because Article 7 says that you are forced to accept Bitcoin if the client, the customer wants to pay in Bitcoin, which is not very often the case. Article 8 says that if you don't want, you can just use the government infrastructure to convert instantaneously in US dollars. And Article 12 or 13, I don't remember, says that if you cannot access the government infrastructure for any reason, include literally any reason, you are basically exempt. So it's a super like light legal tender. So I don't think that would ever be the trigger for a protest, even including just, I don't know, it's probably 100 people. Maybe from some drone views, it can seem like there are 200 people. But even for so few people, it seems crazy that they are triggered by that. So, right, I mean, I understand if they're protesting anything else about Bukele or the government. I mean, they may be protesting everything. But these, I mean, how can you even imagine to be I mean, in the worst case scenario, you consider it a joke or stupid or not interesting. But how can you burn stuff? Because, okay, no a la dictatura, si la democracia. So maybe it was some protest born for something else that was heavily hijacked for this kind of stuff. It reminds me a little bit. You remember in Belarus with Lukashenko. So Lukashenko is a communist bastard. He was beating up people. He was arresting oppositors. Right. He was basically doing bad shit since a lot of time. But then there were this protest against him since a long time. But then he started not to enforce Coro-Nazi rules. So over the sudden, the West started to emphasize and overblow the protests. Also, a few people were protesting because Lukashenko was not keeping them prisoner in their home, and they were actually overexposed by Western media. So maybe something similar.
Yeah, and real quick before the other guys comment, the reality of the situation is, if no one's going to force you to take Bitcoin El Salvador. Like, if a Bitcoiner comes in looking to spend the Bitcoin and you can't accept it, I mean, they'll just pay in other ways. This just seems crazy to me. All right. Anyway, let's move on. Let's take a little trip down memory lane and remember our oldest memory of Gavin Andresen. Gavin Andresen may or may not have written this post about a possible Bitcoin future. He still believes in big blocks. And I send out a really quick tweet. I mean, read this if you want. I mean, it's totally, completely, he's been wrong. I mean, like, Gavin Andresen started this fear mongering that Bitcoin blocks aren't big enough. And for some reason, my mempool.space isn't loading, but Bitcoin blocks have been empty literally for the last 6 months. Or close to it, or like 3 to 4 months, okay? So I just sent out this tweet real quick. The dumbest thing Satoshi ever did was to trust Gavin Andresen with Bitcoin development. We are all incredibly lucky Bitcoin managed to stay decentralized and survive with him, Jeff Garzik, and Mike Hearn all coding and having admin keys at the same time. I don't think Hearn ever had a key, but Garzik and Andresen did.
I'm gonna say what I always say, Tom. I'm gonna be that annoying guy again. The the best thing Satoshi could do would be to hand off the keys to someone like Gavin Andresen, because then you deal with that problem up front of what happens when there's too much trust placed in one developer. What happens if they go rogue? What happens if they're a bad actor? Like, choose the worst guy, choose the worst actor, choose the most stupid one too, the one that demonstrates the most incompetence, and then Bitcoin's going to have to confront that problem
and close your
pretty early
messages.
on.
4D chess by Satoshi.
So say again, Jimmy?
Close your
DMs
messages. Yeah.
Oh, my bad.
So yeah, I mean, I'm happy that the whole Gavin thing has happened, because, you know, it's an intuitive problem for a lot of people when they're getting orange pilled. Is, hold on, who writes the code for this thing? And it's a difficult thing to dismiss, because it's a legitimate intuitive understanding of, like, hold on, so if Vitalik can just change Ethereum, isn't there an equivalent figure in Bitcoin? And you're like, well, no, our creator is Satoshi, and he disappeared, and we can pretty much trust that he's not coming back at this point. But there are other people that have kind of had a lot of influence over it, but they've all sort of one by one, apart from, like, yeah, some of the older developers like Luke Jr. and all that are still around, of course, but like a lot of them have just written themselves out of Bitcoin's script, and they, once you do that, at least, especially in the way Gavin did, you're gone. And it's good to have confronted that earlier. It's like, what happens if a giant exchange collapses? Well, we've seen that. What happens if a developer goes rogue, the most prominent developer? Well, we've seen that. Like, Bitcoin survives this. And this, I'm sorry, it's just impossible to invest millions of dollars in something unless you see it get stress tested like that. So the whole thing is completely, like, it's all very well having decentralized, robust, anti-fragile system in theory, but I feel like most people work the way I work, which is I need to see Bitcoin nearly die over and over again and keep surviving it to go, all right, this thing's fine. Like, I just need to feel it. So that's why I'm happy about the whole Gavin Andresen thing. And this article specifically, it's I haven't come up with an analogy for it yet, but it seems like this is basically, I think there's potential to have a problem decades from now. So let's break the thing right now to fix that problem that we might have in the future. And his solution he thinks the problem is that the only people that are going to be using Bitcoin on the base layer are so big that it becomes centralized with regard to who can actually use it for transactions. And as a result, that small group of people decide to get rid of that bit of technical debt, and just because all Bitcoin is happening on other layers and in centralized, private databases at that point, he says, let's just get rid of the blockchain altogether. Let's get rid of the base layer. We don't need it anymore. That's his theory about what would happen. I find it very unlikely. That I don't think that's going to happen anyway. But even if it did, his solution of making blocks bigger as a result is, it's just so bizarre that he's still hanging on to it. Because if you want to make blocks bigger in Bitcoin, what you have to do is you have to do a hard fork, and you have to get a whole bunch of the community together or enough people with you that agree for that to happen. Then you fork off and you see how well it goes. And guys, that's already happened. Gavin Andresen, your dream of that exact scenario is that's what Bitcoin Cash looks like. And it looks like a failure. So it's time to give up. You're not going to be able to do it with Bitcoin, because it's been done and it didn't work.
Yeah, you're not going to make blocks bigger, and your best ability to do it is to spend your energy building a time machine and convincing Satoshi to lock it in at a different level. I mean, that's really, you'll have more success trying to do that than getting everyone to convert to a bigger block with a hard fork. Jimmy, you want to go for it?
Yeah, I love how his scenario is just completely crazy, because essentially he's saying, all right, Bitcoin is going to centralize around these like alternate second layers that are really like not really Bitcoin, but like wrap Bitcoin or something like that. And basically using that, everyone's going to use those because it's bigger and faster. And then at some point, they'll just forget about the Bitcoin network. I don't think there's a snowball's chance in hell this scenario plays out, because the people that are on Bitcoin don't want to trust it with a central party. And his argument is just completely bonkers. But I mean, this is what people do when they like get Bitcoin derangement syndrome, and I consider him like one of the early people with Bitcoin derangement syndrome. When you've been rejected by Bitcoin, as many altcoiners have, as many sort of like OGs that went on to go do other things have, it's very difficult to deal with the fact that you were wrong and that Bitcoin was right. And he's one of those people that just can't deal with it, right? Like he was clearly wrong. He tried to centralize and like basically quote unquote throw his weight around so that he could influence development however he wanted. And like it's very difficult to take that and take that hit to your ego and like just sort of like be humbled by it. Instead, he's just sort of like come out on the other side, kind of like, kind of like a Napoleon Dynamite character, like thinking he's right regardless, and just sort of like deluding himself that everything is fine, and that he was always right, and that he doesn't want to take a hit to his ego and so on. So, he makes ridiculous posts like this, thinking that he's actually like providing value. Really, he's just giving fodder to altcoiners and telling all the other people that have Bitcoin derangement syndrome why they're okay, or that they're ultimately going to be proven right, even though there's zero evidence that that's actually going to happen.
Giacomo, anything to add before we move on?
Yeah, let me be the contrarian here. I will try to play the devil's advocate. So I agree with everything has been said about Gavin Andresen by Jimmy and by Lex. I agree, but in the context of Gavin Andresen being what he is, and being as wrong as he is, this article, I think it could be particularly still meant into making some vague sense. For example, one is still bitches about small blocks and all that stuff, but is really conceding right now in this scenario that he is basically capitulating. He's saying Bitcoin will never have infinitely bigger blocks, so we will have to scale in layers, let alone how stupid his particular description of layers sounds. But he's basically capitulating into saying Bitcoin main chain cannot increase enough, and we will move to other layers. And then what he does is describing these layers in a way that they will take over any kind of weight on the main chain, which is a little bit absurd, because the more people will move the transaction off chain into this side chain or second layers, the more block space will become available with the same supply and less demand on the main chain. So it will become cheap again. So people will, there is like an equilibrium force there. There is like a balance. The more people will move to second layers, the more block space will become available and cheap, and people will go back. So the scenario of people abandoning the main chain is unlikely. But even if you assume that scenario, the last sentences of the article are like, okay, people just move to the second layer. Nobody uses the main chain anymore, unlikely. And Bitcoin just goes on because of the original scarcity of the 21 million, which is what Bcash and altcoins were actually infringing upon and challenging. So he's capitulating all the way down. If I want to super steelman the article, I may say that this is the idea that the main chain will be abandoned and we will have some migration to another infrastructure, not for block space, which is absurd economically, but for other reasons, for example, interstellar travel or something like that, has been put forward by serious people as well. Like Adam Beck was discussing many times when we first proposed with others the idea of sidechain, that we can have this two-way pegged sidechain, and then eventually, if a sidechain proves to be as decentralized, as censorship resistant as a layer, we will just gradually dismiss the whole layer and just move like this. Instead of hard forking, we will just migrate economically. And Ruben Thompson just expanded this concept to space chain. Space chain are there just like one directional, one pegged side chain, where you create a Bitcoin, a side coin by burning a Bitcoin. And then if the side chain, the space chain is really better and nobody needs to get back anymore, then people will just abandon the main chain, moving to the space chain, and you will not have any decrease in the price of Bitcoin for that, because everybody leaving the main chain for the space chain will burn Bitcoin, reducing the demand but also reducing the supply at the same rate. So you will have stable prices or growing prices where people abandon the main chain for the space chain. So the scenario, it's unlikely, especially for the reason of block space, but it could be still meant. So compared to everything that Gavin Andresen has written over time, this sounds like a capitulation all over the main talking points of big blockers and shitcoiners.
Oh, that is a really interesting concept of burning your Bitcoin to move on to another chain. And I'm sure the other chain only has 21 million units as well, right? Probably similar.
Or whatever amount was burned. Yeah, I mean, this is like an old thing from like Counterparty.
Yeah, I know. Counterparty kind of tried doing that, but that Counterparty was just silly, I thought. But
well, also there is that is not that important, a little bit off topic, but in Counterparty there was a window. It was better than an ICO. So Counterparty people, they were more honest, as like Omni people, Mastercoin, because there was no ICO or bullshit like that. But they just created a window where you could burn. What the space chain, the space chain proposal is, you create a side chain of any kind. You don't create any pegging mechanism like a federation or drive chain, nothing. You just make the new chain will create a coin when a Bitcoin is burned. In this case, basically you create a trustless one-way pegging without price impact. So the new coin can have a price that is at most the price of Bitcoin. Because if the price was more than the price of Bitcoin, arbitrage will just occur and people will start burning Bitcoin. So there is a cap on the price of the side coin, which is not more than Bitcoin. It can be lower though, especially if, as probable, the utility of the side chain will be, of the space chain will be lower than the utility on the main chain, which is probably going to be the case forever until we have like quantum cryptography, interstellar infrastructure. I think that in the year 4000, probably we may have a migration of the scarcity of Bitcoin into a space chain, maybe.
all right, yeah, no, that is interesting. All right, let's unless you guys have anything more to add, I'm gonna get back into screen share and we're about to look at the price of Bitcoin. I don't know why my mempool.space isn't loading, but I'm sure blocks are fairly empty. Before I start talking about the price of Bitcoin for a few minutes, and if any of you guys have to go, like Jimmy or Giacomo, just let me know what websites to plug for you, or stick around 5 to 7 minutes more. Your call.
I think I have to run. There is giacomozucco.com, which is not as well maintained as yours, but there is something. And then that's all.
All right, guys.
Bye, guys. Thank you.
Check out giacomozucco.com. I'm pulling it up now on my other monitor because I'm constantly doxing things I shouldn't be doxing. So here it is. Let's really quick come out to Dubai October 14 to 15 for understanding Bitcoin. Jimmy unfortunately won't make it, but Lex will make it, and Giacomo should make it as well. Here are the videos from the last event. All these links are in the video description. Stick around for the financial summit. Not going to talk much about that. In the affiliate page, I have now added Start9. This is a plug for Start9 and Bitcoin Mechanic, where he has recently taken employment. This is the Start9 website. Let's plug Jimmy's as well. Since I am at it, we're going straight to programming Bitcoin. Jimmy.
Yeah, so I have 3 books: Programming Bitcoin, the Little Bitcoin book, and Thank God for Bitcoin. You can find them all on Amazon. Programming Bitcoin is for developers if you want to learn about Bitcoin. The Little Bitcoin book is a quick intro to Bitcoin, and Thank God for Bitcoin is a moral argument for Bitcoin from a Christian perspective. I am going to run the programming blockchain course. This is a 2-day course for developers to learn all about Bitcoin, and it is happening in Atlanta, November 2nd and 3rd, right before TabConf, which is November 5th, 6th, 4th, 5th, and 6th. So if you want to take a course from me, please apply. Also, I have scholarships to give away. So, a little further down, like you can apply for. I think you have to go to programming blockchain scholarships. I think it was in the sub menu there. Anyway, it's all there. Please apply if you are interested. The other stuff is I have a newsletter, jimmysong.substack.com. And I'm on Twitter, Medium as Jimmy Song, and yeah, I think that's about all I have to show. Yeah, there you go. Let's leave it at that.
Okay, and also real quick, someone asked me about my sweatshirt that I'm wearing. The sweatshirt is from Satoshi Corner. And the other day, someone asked me about my shirts. I'm not gonna spend too much time. I'll do another show. If you are on Instagram, check out Anthony_boutique_bouquet. He had all my measurements, and like some of my shirts are like literally here. This one is one of mine, and there were others. And then there's a video of me and Willy Woo because we're somewhere there. So if you just scroll through this, this is where my shirts come from. You will have to send him your measurements, and you can also look for Satoshi Corner. There it is, Satoshi Corner, and that's where my sweatshirt comes from. Okay, so there you guys go. All right, price of Bitcoin. Here we go. Yesterday, I stayed very adamant that the $40,000 low will hold. The weekly candle is starting to look much better. I would love to see this rally all the way back up and create a giant shadow, making the body of the candle small and even eliminating the red arrow. The 3-day chart is our Consensio chart. I am staying patient here. Realistically, there should only be a maybe a 15 to 25% Bitcoin allocation. I am staying with the 40 to 50% Bitcoin allocation, mostly because I didn't put in the other thing. And this candle could close very, very nicely. Here is the bounce right off the 128-day moving average. We breached 40,000 for about an hour or so. Here is the hourly chart. We breached 40,000 for about 10 minutes, 10 to 15 minutes. We have rallied off of that. I said yesterday that I become extra bullish if we can rally past the prior swing high, which was at $43,400 or $500 range, which we did. We have now basically, I'm gonna just swing this over to here, and we have now basically pulled back to this area, general area of support. I don't like the fact that we've taken a lot of candles. The MRI is bearish. This is just a pullback, in my opinion, and I believe that the low is in, and I will win my bet against Joe Sass because the bet was a clear and obvious close below $40,000, which did not happen because we only stayed below 40,000 for approximately 15 minutes. So I am still holding to my view that 40,000 is the low, and then therefore I am still holding to my view that we will break 100,000 or come close to it by end of year. I remain fairly bullish here. I don't like this candle, but I am still confident that we will have a little bit of a rally into end of day, closing this candle green. We will have a few challenges right here at these moving averages, but the more these moving averages spread out, the easier it will be to break each of them one by one. I want to take a quick peek at the S&P 500. You can see the shitcoins are rallying as well, and BTC dominance hit an MRI top. GBTC starting to go back up. Obviously, gold can still rally. I don't know what it is about today, and Tone Vays showing his private messages, but stock market is rallying as well, a little bit, and we will still see whether the stock market is going to take a bigger hit or not. That is pretty much it for me. Tomorrow's Bitcoin update on price will be very interesting. Not much interesting today. I called the reversal yesterday. It is still in reversal phase, and tomorrow we should know much better whether 40 will hold or we're gonna go all the way back up and break 50. All right, guys, do you have any questions for me before we close this out?
You're still bullish on all time frames?
You know, the daily is a little bit scary right now. It's a lot easier to trade the breakout than it is to trade the reversal. I believe we have reversed off of 40, but the daily chart is certainly not bullish. You know, like we would go bullish if we go back, you know, where we were a week ago. Then the daily will really be bullish. Right now, I'm calling the reversal, and the weekly chart is actually bearish at the moment. But I think by the time this week closes, it could be back to looking bullish. So a little bit in no man's land at the moment, but I'm optimistic. All right, guys. Thank you all so much for watching. And we will see you all on the next one. We'll try and do this once a week. Come join Lex and myself and probably Giacomo in Dubai, October 14 and 15. Bye, guys.
All right. Oh, man.
Jimmy, sign off.
Oh, yeah. Piazza Linda, this song is done. I thought we were done.